everybody, Smart Silver Stacker here. We got news of the Fed taper yesterday. Jerome Powell announced at the FOMC meeting that the Fed would begin to taper its purchases of treasuries and mortgage-backed securities by $15 billion each month. So we're going to see these direct asset purchases by the Fed slowly dwindle down, although Powell did make a point to emphasize that the Fed may adjust the pace of the taper if economic conditions should require it. So it's about as tepid a taper as you could get, and honestly, at the end of the day, I think it will prove to be too little, too late. The inflation genie is already out of the bottle, so much currency has already been created. We're going to see higher inflation regardless of the taper. Despite the fact that Powell continued to reassure us that the inflation we are seeing is only transitory. So far, the reaction to the taper seems pretty minimal. Stocks finished high yesterday. Gold, silver, and oil, they did have a big dip at the beginning of the trading session yesterday, but they've all already recovered most of their losses. So the taper, I think, was largely already priced into the market. And why wouldn't it be? Powell had all but guaranteed a taper by the end of 2021, so it was really no surprise. It's hard to characterize the taper as any kind of hawkish move, though. Interest rates are still extremely low, and the Fed won't be raising those anytime soon. At least Janet Yellen over at the Treasury is hoping they won't, because she knows that we can't sustain our growing national debt with anything resembling normal interest rates. Now, if we do begin to see rates on treasuries rise, or stock valuations come under pressure, or real estate begin to dip in any meaningful way, I would not be surprised if Jerome Powell went ahead and did some damage control and possibly adjusted the pace of the taper or canceled it entirely. So the taper is really just a distraction from the big picture, I think, and the big picture is that the economy is still a house of cards. Shortages are here to stay, and inflation isn't going anywhere. Here's a headline from Bloomberg. Meat sticker shock looms as $3,000 bonuses fail to end worker shortfall. So one of the big shortages that we're seeing is one of workers. And I've seen a lot of explanations for this, but a really simple explanation is that it's just serious wage inflation. If you want workers, you need to pay a much higher price for them than you did in the past. And this is obviously a form of inflation that quickly works its way into many products and services as the human labor required to provide them becomes much more expensive. And this article is about the meat industry's struggle to find workers. Traditionally, meat packing plants are not real pleasant places to work, and these jobs don't pay the best, so this is an industry where we're really seeing the shortage of workers manifest itself. Back to the article. Companies have tried all the usual tricks to lure applicants, including offering signing bonuses of as much as $3,000, but they're still short workers, and as a result, there are an increasing number of sparse shelves. Some cuts of meat have soared 25% over the past year, while others are fetching near record prices, making meat one of the biggest contributors to pandemic inflation. Okay, so first off, I want to go ahead and say that meat is not a contributor to inflation. High meat prices are a symptom of inflation. High prices in a number of items is a symptom of inflation. It's not limited to meat. And I would like to know what prices you have noticed rising. Let me know in the comments some examples of rising prices you've personally experienced. I'm always fascinated by the insights I get from all of you watching. Also, the article refers to the inflation as pandemic inflation, but it's not pandemic inflation. It's regular monetary inflation. Debt is being monetized. Interest rates are artificially being kept extremely low, government spending massively exceeds tax revenue, and all of this predates the pandemic. So to constantly see all these rising prices blamed on the pandemic, it's just a scapegoat. The real culprit is the central bank endlessly expanding the supply of currency and enabling profligate government spending and borrowing by keeping rates low and even directly purchasing government debt. At this point, the Fed is kind of backed into a corner where there is no policy decision they can make that leads to a positive outcome, at least by most people's standards. So they're just trying to keep this economy running along as long as they can without it crashing into a wall. The system has so much debt and regulation and corruption and zombie companies and all of these things that are dragging down the economy that it's getting harder and harder for the Fed to maintain the status quo as the economy becomes more and more fragile. And we see it with each crisis we face, the consequences becoming much more dire and the intervention required by the Fed to reinflate the bubbles becoming greater and greater. So whenever we do find that next pin, whatever it might be, and we'll find one eventually, every bubble always finds a pin, but when we find that pin and this current massive debt bubble pops, I think we all know what the Fed's response is going to be. If you think the extended benefits we saw last year in the eviction moratorium and the bailouts were over the top, that was just a dress rehearsal. When the big one finally hits, we will see all of that stuff again, but this time way to the next level. Think universal basic income, permanent eviction moratoriums, the sky's the limit. But one thing's for sure, a tremendous amount of currency is going to be created, and that's when you will be glad to have some gold and silver. Here's another headline from Bloomberg. Global food prices are getting closer to a record high. From the article, a United Nations index tracking staples from wheat to vegetable oils climbed 3% to a fresh decade high in October, threatening even higher grocery bills for households that have already been strained by the pandemic. That could also add to central banks' inflation worries and risks worsening global hunger that's at a multi-year high. So for anyone who's skeptical that there will be massive intervention in the face of any economic crisis, remember, people tend to get a little unruly when they begin to starve. We're already seeing record high food prices, and supposedly we're in the midst of this amazing economic recovery. Imagine what will happen if things take a turn for the worse. Hunger leads to unrest, and that will force governments to intervene one way or another. There will simply be too much political pressure to do anything else. But of course, they have no money to finance any kind of economic relief, so any intervention will be financed by the printing press. The article from Bloomberg goes on, bad weather hit harvests around the world this year. Freight costs soared and labor shortages have roiled the food supply chain from farms to supermarkets. An energy crisis has also proved a headache, forcing vegetable greenhouses to go dark and causing a knock-on risk of bigger fertilizer bills for farmers. Okay, so bad weather, freight costs, labor shortages, supply chain disruptions, and an energy crisis. Anything but currency creation will be blamed for this inflation. I mean, it's amazing that all the money printing and debt monetization doesn't even get mentioned. Not once in any of these articles I read about inflation does anyone ever mention currency creation, which is of course the cause of all of those other problems. It's like there is just this campaign to keep people in the dark as to the real nature of inflation. And of course, the longer people can be kept ignorant, the better for the Fed. There's a quote attributed to Henry Ford. It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. And I think Henry Ford understood what the Federal Reserve was up to even back in his time. So the taper won't really mean much at the end of the day. We're still going to have to deal with the consequences of all the currency creation. Fortunately for us, we can still protect ourselves to some extent with precious metals. And I think that the dip yesterday was a good opportunity for stacking some silver. And I'm going to be keeping an eye out for any dips like that in the future. Of course, none of this is financial advice. I'm just telling you what I'm doing. Always make sure you do your own due diligence before making any investment decisions. Sometimes people ask me in the comments for recommendations for where to get gold and silver. And I like to tell people just to find a reputable dealer, do some research and some due diligence, make sure they're legit and they're not charging you way too much over spot. But if you guys are looking for the name of a specific dealer, I can tell you that I've always had a good experience with SD Bullion. I've purchased from them many times and never had a single problem. And I do have a link down in the description of the video. If you guys click it and make a purchase from SD Bullion, it does help support the channel. So I will say thank you in advance for anyone who does that. And thank you very much to everyone for watching. Don't forget to like, comment, and subscribe. If you want to see more videos about silver and inflation, then check out these videos here. I will catch you next time. Smart Silver Stacker, out.